be here, and greetings from a really lovely fall evening here in DC. So the Tax Law Centre at NYU Law focuses on US tax law issues. So when I start sort of straying into talking about New Zealand fiscal policy issues, I'm definitely doing that in my own personal capacity and my own personal accent, and not doing that on behalf of the Tax Law Centre. So what I was thinking about I would do today is just to give you a little bit of an overview of some of the pretty monumental tax policy changes that are being considered in the US right now, and some of their connections potentially to New Zealand tax policy. So just a little bit of really recent history before heading into what's going on in tax policy right now in the US. The public health response in the US has been such that 1 in 500 Americans has now died of COVID-19, and that lack of public health response remains one of the most pressing near-term economic and fiscal issues. Nevertheless, lawmakers here did mount a major fiscal policy response to the pandemic recession. And while that had very many holes, the multiple rounds of fiscal stimulus that they enacted was pretty remarkable. Market incomes took an incredible hit due to the pandemic, especially for low-wage workers and workers of colour. But when government assistance is factored in, poverty rates actually fell in the US by 2.6 percentage points in 2020 compared to 2019. And that was due to the vigorous fiscal policy response. And again, below that headline, there were many systems disconnected and vulnerable families that were left out of that safety net response. And as those stimulus measures start to fade out, we're starting to see some measures of material hardship here, including food insecurity, start to tick back up again. So that's the recent history. And what's happening now is that the Biden administration is proposing, and Congress is considering, a package of recovery measures that would make investments in infrastructure, reducing child poverty, childcare, paid leave, health coverage, addressing climate change, and a host of other critical needs. And that package is going to be, is proposed to be financed with major permanent tax elements. So this is not full-scale tax reform. It's going to be just enough to finance whatever parts of the package lawmakers determine that they want to pay for. But it still means some pretty substantial tax changes on the table. So I'll just overview the 4 big buckets of tax changes that they're considering right now. The first is probably the most, potentially what you might have heard about the most and worked on the most, which is corporate and international tax reforms. And that's because it has a really deep connection to some of the global conversations that are happening right now. What the Biden administration and congressional lawmakers have proposed are a set of proposals aimed at reversing some of the deep corporate tax cuts that President Trump and Congress enacted in 2017. In addition, they are proposing to reduce some of the current US tax code's subsidy for its large multinationals to shift profits and investments into tax havens. That would include provisions that would complement this pretty monumental, once-in-a-century global rethinking of the international tax framework that's currently happening multilaterally. And just to step back for folks that might not have been following it so closely as some of you involved in Tax Justice Aotearoa, that current global international tax framework was put in place about a century ago. And it really focused on countries coming together to try to avoid taxing the same profits more than once. So it was really focused on avoiding double non-taxation where there was cross-border economic activity. But that system's really not designed to prevent double non-taxation, which is what we've been seeing as more and more of a problem over recent decades. And that's where multinationals report income in countries that are neither their home country nor where they made the income. Instead, they report that income in tax havens where the income is taxed at very low or zero rates. And there have been sort of sporadic multilateral attempts by the OECD and various other groups of countries to try to address that problem sporadically. But those attempts have largely failed, and one of the reasons why is that they were often focused on trying to discipline low tax countries and tax havens instead of paying sufficient attention to the role of rich countries in setting up tax rules that allow their resident multinationals to enjoy large tax benefits if they shift their profits to these tax havens. So over recent years, this has come, I think, a lot since the Great Recession, in fact, has come to light and come to the attention of lawmakers and the public at large. I think in large part due to efforts of folks that are around this table tonight. I see sort of Oxfam here, Tax Justice as part of the Tax Justice Network, and there has been a lot of work globally at bringing to light this issue for both policymakers and the public at large. So the new inclusive framework that was negotiated at the OECD, but also has had countries from outside the OECD, now more than 180 countries sign up to it, does represent part of that shift in focus and thinking. It's not perfect, but it does represent a pretty monumental reworking of a centuries-old framework from one to focusing solely on double non-taxation to one that focuses on giving both developing and developed countries more room to adequately tax the activities of cross-border activity. In large part, that multilateral agreement was reinvigorated by the new Biden administration, bringing the US back to the table in a constructive way around that. And that the Biden administration has quite explicitly said that it supports this framework as a way to end this global race to the bottom on countries undercutting each other on corporate tax rates. So back to the sort of domestic proposals that are on the table in the US, those proposed changes to how the US would treat its multinational businesses under US tax law really put into action some of the principles that have been negotiated in that global framework. So, for example, the proposals would raise the US's minimum rate of tax on the profits that its multinationals make offshore. If those profits are taxed very lightly in other countries, the US will top up to a minimum rate of tax that is substantially higher. And while where the domestic and foreign rates actually land is still very much under negotiation and unclear, the Biden administration has proposed a top domestic corporate tax rate of 28% and a foreign minimum tax rate of 21%. So that's the first big bucket that's on the table in terms of revenue raises to finance this investment package. The second bucket is really not a tax increase, but just a set of proposals that would ensure that profitable corporations and well-off filers pay taxes that they already owe under law. Here in the United States, the Internal Revenue Service has had its enforcement budget cut by more than a fifth in real terms since 2010. That's despite the population growing, the number of tax returns growing, complexity growing. They have lost expert auditors. More than a third of the auditors that are expert enough to audit the complex returns of large corporations. And, unsurprisingly, the audit rates of the very largest corporations in the top 1% have been more than halved over that time. So proposals would reinvest in the IRS and also give it tools to be able to sort of see into the opaque income sources of the very wealthy and the largest corporations. A third big revenue bucket is reducing tax subsidies for income from wealth compared to the rates of tax on income from work. And that includes reducing the rate differential between the top rate on income from salaries and the top rate on capital gains. There is a somewhat comprehensive capital gains tax in the US, and proposals would potentially address a feature of the code that allows income from existing wealth to accumulate, to grow over a lifetime, or maybe even across generations, without facing any income tax whatsoever. So those are the revenue raising buckets. And the fourth bucket is a little bit different. It's provisions that use the tax code to deliver specific forms of spending. Some of these are investments in the climate arena, investments for transitioning the fleet, for investment in new technologies that are not as reliant on CO2 equivalents. But another very important one is a potential making permanent of a temporary provision that increased the American child tax credit, which is, as the name would suggest, a tax credit delivered through the code to support the expenses of raising children. It would make that boost to the child tax credit that was enacted during one of the rounds of pandemic stimulus last for longer, or maybe even be permanent. One of the big changes that happened to that child tax credit was that it was made fully available to households that have no earnings. So that means that the poorest households are eligible now for the full child tax credit. That alone reduced the child poverty rate in the US by 40%. So it's a rather large deal to try to make that provision permanent. Okay, so that's kind of the scope of what's on the table. Let me just sort of add some commentary here by kind of putting some of these changes in context of both prior fiscal policy in the US and also the situation in New Zealand. So, of course, the US is exceptional on a number of fronts relative to New Zealand and other rich countries. Revenues as a share of GDP, the size of government overall are very low. It's in the bottom 4 in the OECD. It also does less than just about any other OECD country to reduce poverty through the fiscal system. The US starts off with about the same market income poverty as other countries, but after taking into account taxes and transfers, it has a much higher poverty rate than most other OECD countries. In the US, income and wealth inequality is very high, and intergenerational mobility in particular is very low. So this entire package of, sort of very basic, raising more revenue to invest in areas of critical need, including child poverty reduction, is really in a number of ways just bringing the US closer to international rich country norms. As for New Zealand, when you sort of look at the New Zealand situation, we do well in relation to the US on a number of these fronts. But on a number of these fronts, relative to other OECD countries, New Zealand is, of course, also towards the bottom of the OECD, and in some cases, even more of an outlier than the US. As you know, we are even further down the bottom of OECD tables when you look at the extent to which incomes and race matter for disparities in outcomes, including in health of children, educational outcomes, housing stability, and a number of other really key areas. So inequality to a large degree in New Zealand matters for outcomes in ways that is more pertinent even than in the US and some other countries. And of course, inequality, poverty, after taxes and transfers are also in the bottom half of the OECD tables. So a couple of comments. While the maximum child tax credits, for example, in New Zealand are more generous than in the US, I understand, and some of you may know better, but still in the child tax benefit in New Zealand, there are about 170,000 children in the lowest income households that are still left out due to the requirement for work in households. So that is potentially an area one could look to the international trends and take some lessons from where the US is looking to head. And the other area is that while we're having this conversation in the US about closing gaps in the capital gains tax rate and base versus the taxation of wages and salaries, and preventing large accumulations of income and wealth to go untaxed across lifetimes and generations. The last I checked in, New Zealand is looking at things like an interest deductibility limitation rather than a comprehensive capital gains tax. And these are good policy measures, to be sure, but it's still sort of a little bit of the clipping of the toenails of the elephant in the room, and very familiar to me to when I was working on these issues a decade ago. So let me pause there and see if you've got questions for me. I'm happy to do some utterly worthless crystal ball gazing about where all these negotiations might end, talk more about the details of the policy or anything else that you'd like to talk about.
You're on mute, Louise, if you're talking. Bottom left of the screen, maybe.
Okay. Thanks so much, Chye-Ching. Great overall presentation. Almost makes tax in the US comprehensible, which is saying something. And I, for one, would be quite interested in getting some crystal ball gazing. But before we do that, I think, it would be really great. I'm sure people will have questions. Could I suggest that people who want to ask questions or open up a discussion do so by raising their hands, either physically like that, if I can see your or by using the function with the chat. I see that Lois has raised her hand, electronically speaking. So Lois, we'll begin with you, and I'll hope to try and find other people. So use the chat or physically if you've got your face. Oh, Lois, you weren't? No. Okay, sorry about that. I'll just see if anybody else. This is such a big screen that. Right. Well, Max, would you like to ask your question in person, as it were? You've asked everybody. You'd asked everybody about some version of a capital gains tax. There's also Alison. Alison, would you like to ask, perhaps if we could begin with Alison. Alison, if you'd like to ask your question to Chye-Ching and everybody else, and don't forget to unmute, which I just need to be reminded about.
Thank you, Chye-Ching. That was really interesting. I just wondered, completely ignorant, does the US have any taxes on wealth other than a capital gains tax at the moment, such as an inheritance tax or wealth tax or anything of that nature?
Yeah, that's a great question. And yes, they do have an estate tax, which is a tax that's levied on the value of an estate that's passed on to heirs. Now, that sort of originated basically as a backstop on the income tax, because there's this weird provision that says that if you hold assets until you die, any accumulated capital gains tax on the assets that you haven't sold gets wiped out. So none of that faces tax. So you have instead an estate tax that kind of mops up and makes sure that at least some of that faces some type of tax. Now, the problem with the estate tax is that's been eroded so drastically over time that at the moment the exemption level is at about 22 million per couple, and so it reaches really very few estates. But in addition to that, there are a plethora of I don't throw this word around wantonly, but true loopholes, things that were not intended in the code that people have found ways to sort of get around the estate tax, so that very even the largest estates, they can get a lot of their assets out of the reach of the estate tax. So it does very little.
Thank you.
Yes. A little bit similar to the history of inheritance or estate taxes in New Zealand, but we went the whole hog and got rid of them completely. So that is yet another area that we are worse than the US, I would have to say. Max asks Chye-Ching and also all of us about, well, Chye-Ching perhaps in particular, if I could just mirror your words, Max, what do you think are the prospects in the US of a wealth tax? We in New Zealand, Tax Justice that is, have talked about the idea of a wealth tax, and so far, I have to say, have not got much traction, but in terms of actual implementation, of course, but we remain interested in it because, especially with capital gains tax sort of semi off the table, it's an idea of smuggling in that idea in a broader way. So what are your thoughts on a wealth tax in the US?
Absolutely. It's a great question. And I think there's sort of a short-term answer and a long-term answer. In terms of the package that's on the table at the moment, it's really not part of the conversation, both because of, I think, appetite politically. Even Biden's more modest proposal of capturing those gains at death has come under significant fire, and there is some indication that Congress is not willing to go even that far. So there are, there's conversations around that. But there is also two other sort of big hurdles. One is implementation and administration, and some of the sort of key questions about how to do this tax are still very much under development. The second is a uniquely US issue, which is that there is a constitutional question about whether or not a wealth tax would survive. Now, that sort of splits into two different issues. What one thinks, sort of with your constitutional lawyer hat on, what do you think the best reading of the law is? And one might put that hat on and think that a wealth tax might survive a constitutional challenge. The legal realists like to take that hat off and think about what the current Supreme Court might do with such a tax and come back with a much more pessimistic answer. I think one of the really interesting things about that whole constitutional debate is that the clause in the Constitution that makes it difficult to think about levying a wealth tax is actually the very same clause of the Constitution that initially treated people that were held in chattel slavery as 3/5 of a person for the purposes of counting votes in the Electoral College, and also determining how the proceeds of such a direct tax that falls under this clause would have to be apportioned among the states. Some historians have tracked that back and think that effectively that clause was put in place in order to stop the federal government from being able to tax a particular form of wealth, i.e. chattel slaves, out of existence. So the idea was that they were scared that the federal government would place a tax on slaves that was so high as to make them uneconomic, and basically abolish slavery through taxation. So they put in this clause to try and stop that. And here we are many years later thinking about the levers that are available through the fiscal system to reduce inequality, including wealth and racial wealth inequality, and having to wrestle with that clause. So that is one thing that New Zealand doesn't have to think about in terms of the question of whether such a thing is viable, but it is a real issue at the moment. I would also say that, the wealth tax, there's a spectrum of things. I think that there are more and more tax policy proposals that people are thinking about nowadays that one has to worry about the Supreme Court with respect to, because their appetite to engage in fiscal policy issues seems to be rather large and not particularly well bound by precedent. So that's another thing that's sort of lurking out there.
All right, okay, well, thank goodness there are some complexities we don't have to deal with, like the Supreme Court. But even so, even so, they have gone some way towards a wealth tax with the capital gains, the capital gains reality that they've had for a while. So, a wee bit contradictory and complex, but I guess that's what tax is all about. Robert Howell, I gather you had your hands up in some fashion. Would you like to unmute and tell us what that was about?
Yes, because of the range of views from very conservative to very radical in the Democrats, and because of the very thin majority, do you actually think Biden will be able to deliver?
It's a terrific question. It's a terrific question, and there is this is why my crystal ball gazing is not very, worthwhile. And if you put, grain of salt, all of those sorts of things. There are so many cross currents that are sitting outside of the fiscal policy arena that can change the conversation really quickly. We've hit a time in the negotiations where all of a sudden, yet another strange thing about US politics, this anachronism called the debt ceiling has reared its head and is sucking up a lot of debate. And that is just sort of another point in the process where there's an opportunity for brinksmanship and things that are sort of completely outside the policy discussion to start sort of driving matters. So there's that. There's the need to actually fund the government. Otherwise, the government will actually shut down, which is another feature of the system that New Zealand doesn't have to deal with. So there are a lot of things outside even the sort of political spectrum that you just mentioned that could impact the way that this negotiation goes. I do think, however, being sort of an optimist overall, that there is a recognition that there are such deficits in investments across a range of areas that there will be a broad spectrum of Democrats and maybe even some moderate Republicans who will want to see a package get over the line. I think a lot of the question will be exactly how robust that package is. And there's a lot of discussion about, willingness not only to do the spending elements, but also how far the lawmakers are willing to go on things like raising the corporate tax rate or some of these other measures around reducing the disparity between wealth and work taxation.
You mentioned about the changes in corporate and international tax. Do you think that if there are changes in the US, New Zealand will be able to jump on the bandwagon?
Yes, I think so. And I think, even without the US acting, which I think there's the strong likelihood that it will act, the fact of the global framework, even if a number of major trading partners move in this direction, it creates a lot of wake for countries like New Zealand to move. So I think this is a very significant time in international taxation. And I would hope that the US sort of takes this opportunity to really kind of take that big step forward, because it would have both domestic and global benefits.
Thank you, Robert, for those very good questions. I wonder if we could perhaps continue on the child theme, because a number of the questions or comments are along those lines. I'm sort of trying to do this in order. Susan St. John from Auckland, you had another point to raise on child tax and credits. Would you like to sort of amplify what's been said?
Thank you, and thank you, Chye-Ching. It's been
Susan.
fantastic. G'day. It's really interesting for us to see the debate about the child tax credit in the US. I'm wondering about the nature of that debate. Is there an opposition to the idea that relates to this thought that you should use child tax credits as some sort of a work incentive? So you would deny it to people not in paid work so that they've got an incentive?
Yes, yes, absolutely. That rhetoric is always there when it comes to supports that are not linked to work. I think the optimist in me is seeing that this concern is being expressed, albeit very strongly, by only one senator. Unfortunately, that senator is potentially pivotal. His name is Senator Manchin, and so he has expressed concern about the lack of a work requirement in the child tax credit. However, at the moment, most of his colleagues have very strongly supported making the child tax credit fully available. They recognise that that is the piece of the policy that has the biggest anti-poverty impact, not only because it's available to children without earnings, but it means that very low income families with earnings get the maximum credit. And many of them have actually looked to the research that folks like yourself and people in Canada have done around the impacts of credits like these, not only on immediate work of parents, but also on outcomes for the second generation. And they're looking to the second generation outcomes and seeing that there's higher likelihood of better educational outcomes and higher earnings as adults, and sort of seeing this policy as a true investment in the sense that you're looking at returns over the long term and not just sort of immediate decisions in the family. Again, evidence out of Canada is that those immediate decisions might in fact go in the other direction. It's expensive to work, and that you can actually have some small increase in work of parents if you allow them to meet basic costs. But you're right. Whenever there's this sort of policy, there's going to be that discussion. But I'm very hopeful that things will head in a good direction.
It could be very helpful for New Zealand in that case to be able to point to the US doing this kind of change, whereas in New Zealand we've had this terrible discrimination built in since 1996. So
it's really interesting, and it's been interesting to me in the sense that this is one of the areas, a lot of the time US fiscal policy is not terribly interested in international norms, but this is one area where evidence from what other countries have done, and in particular Canada, a close neighbour, and with a recent change in its child allowance, has received some attention, and the evidence from that change has been a pretty big part of the debate. So I would hope that some of those lessons kind of broaden out if such a change were to be made. But even from just having the temporary proposal, there's some pretty remarkable research already out of sort of 3 or 4 quarters of this child tax credit that sort of shows pretty directly the alleviation in things like food insecurity and housing instability and various other sort of immediate outcomes.
Yes, it doesn't seem to be a huge amount of money you're talking about, though. Fairly minimal.
Fairly minimal, and I think again it's another sort of strange aspect of the US fiscal system in terms of a lot of the transfers that occur are in near cash as opposed to cash. So you see this sort of stepping towards more cash transfers. The US does a lot more through things like food stamps or housing vouchers or various other kind of tied services.
Yes, thank you very much.
We have a similar question now, or comment. I'm afraid I don't know your name, but the number of this person is 38CMK4, and they had a follow-up question on how this could apply in New Zealand. Would you like to sort of add to those comments or discussion?
I think Susan probably actually has the better answer to that question about removing the working from family tax credits. But I do think the evidence has the body of evidence since Working for Families was enacted has kind of grown from international evidence across US states, evidence internationally about the importance of just simple income boosts for families, whether or not people in the household have earnings, for the children in those families. And the evidence of the lifetime effects for those children is really accumulated in a pretty striking way. So I think that's what's driving some of the international move towards providing more cash support to families, even when there are no earnings in the household. And I do think that is research that New Zealand, like other countries, should be keeping an eye on.
And yes, so the person who is called on the screen, 38CMK4, yeah. Did you have some additional comments?
No, my name's Carolyn. I'm sorry, it just came up with my user ID instead of my name there. But I guess I just wonder why I haven't heard any discussion of this, although it's been in Jacinda's platform. Child poverty is one of our highest priorities, but I've heard no discussion of removing the working from Working for Families. I mean, I have heard some advocates of how that is discriminatory, so that's gotten a little bit of attention, but I just don't. I work for the tax authority in New Zealand. So if it was happening within the tax authority, I think I would have heard of it. But even outside the tax authority politically, there doesn't seem to be any momentum on that. I guess I'm just wondering why. It seems like it's not a complicated policy. And so I guess maybe I'd like to see, you're talking about the research in the other areas and just look at some of it and pass it on among other people and try to get more people reading it, thinking about it.
I wonder if Susan, whether you might like to respond to that, because I know you've done a heck of a lot of work in this area.
Yes, well, we've talked about getting rid of the working out of working for families. It seems to be misnamed. That's perfectly correct. But it is also extremely difficult to get that discussion going in New Zealand because there's such an entrenched attitude that somehow these feckless sole parents particularly need to get out there and get themselves a job. Of course, when we have recessions and we have the COVID crisis and earthquakes and things, it becomes apparent that when people lose their jobs, suddenly their children lose access to this very important payment, which is related to paid work. But it is astonishing to us in Child Poverty Action Group, who've worked on this now for 26 years, that it is so difficult to get traction on it. Max may have some ideas as to why that is.
Well, I might see if Max wants to add something there, but also if I could just suggest, Carolyn, that if you kind of hook into the group that Susan is allied with, the Child Poverty Action Group, and others, of course, I mean, they will have heaps of very, good research and other documents that you might be interested in.
Thanks. I will try to do that. Thank you.
Okay, Max, did you want to comment on anything that either Susan or Carolyn said there?
There's two Maxes on the call. Did you mean Max
sorry,
Rashbrook?
yes, I meant, yes, no, sorry. I think I meant Max Rashbrook. Sorry about that. I beg your pardon. I don't know quite where Max was here, I know that, but...
Actually, it was Max Harris that I was thinking of.
Well, it was Max Harris. Sorry, yeah. Max. Back to you, Max.
I'm sure you've got more considered thoughts on this, Susan, than me. You've worked on it for far longer, but I suppose one point to add is that I just think there's been an overriding political view which has been drummed up over a series of years that paid work is the best pathway out of poverty, and that's entrenched in legislation, and that's been reinforced by kind of waves of political rhetoric. And I think that that real emphasis has like clearly had an influence on this debate, and I think challenging that view is one key part of getting policy change in this area, because we know that a lot of people are not able to work, and there are lots of other reasons why that's just not a view that should still hold sway. But I think that's one thing that we have to keep trying to tackle as part of winning this policy debate.
Okay. Could I now ask Julie, who asked a question about a topic I'm very interested in as well, that is public transparency. Julie, do you think you could phrase your question and ask and see what Chye-Ching has to say to your question?
Yep, kia ora, with Transparency International New Zealand, and the whole debate of having things out in the open is sort of, is this a good thing? So my question is more public transparency a useful tool? Well, is it a solution? For example, on company tax strategies and company uses of overseas tax havens and so on. Would that help? To what extent? And is it being applied in the US? And to what maybe in applicability here? Thanks.
That's a great question. So I think about transparency in this space on sort of two levels. I think you're probably talking about the company by company micro level. There's also the sort of aggregate level, which which actually the US is very good at, and the New Zealand is not great at, and let me try and sort of unpack that a little bit. So one of the things I love about being an analyst in the US is just the availability of data on the tax system. The tax system here is pretty complicated. There are a lot of subsidies for particular types of industries, lots of tax breaks, lots of carve-outs in the tax code. However, we get really good data about who benefits from those tax breaks and how much they cost. And those sorts of estimates have helped generate some, public and political pushback on some of these provisions. So I can go look every year at a Joint Committee on Taxation report, for example, and see how much it costs the US Treasury to have a lower tax rate on its multinationals' foreign profits than the domestic corporate tax rate. And I can take that and put that in front of lawmakers and say, look, this is a tax subsidy for your multinationals to put their profits offshore, and here's the hard data behind it. New Zealand, as you well know, at Transparency International New Zealand, where I think you help with the International Budget Partnerships Open Budget Index, does pretty well on lots of different fronts, but is not quite as great at totaling up and showing where various tax breaks go to different types of people and corporations, and in fact takes a really narrow view of what tax breaks are, so that it doesn't even count, for example, the lack of a comprehensive capital gains tax. So you kind of end up in this doom loop of some of these features of the tax code being a little bit non-transparent and not front of mind of people in terms of how much they're kind of costing. So I think that piece of the puzzle is important, even just at the aggregate level. You're not sort of naming names of particular corporations, but you kind of know for the budget, for distribution overall, what these features of the tax code are doing. On the sort of more micro level, the sort of company by company type issues, I think that's a really interesting question, and I think there's going to be a lot of pressure to go there. Again, there's a lack of transparency in two big places at the moment. One is that even the tax authorities lack a lot of information that they need to sort of enforce the basic tax laws, and some of that is changing. But one big area, for instance, is that in the US, a lot of tax non-compliance happens when there are layers and layers of entities, and a lot of the income that's held through these layers of entities never shows up on a tax return, and the IRS doesn't even know who the ultimate owner is. So some of that is not even being reported to the authorities, let alone publicly. So that definitely needs to change. The question about whether public transparency helps or hurts, I'm a little bit torn on this one, and it's a little bit hard just because the data aren't there to sort of show it. I'm a little bit burned because of the research around things like transparency on CEO pay that suggests that sometimes it sort of forces a race to the bottom if you don't have other mechanisms in place. So what I'm saying is that it lets other corporations know that they should be targeting an even lower tax rate, or doing even sort of, having even lower standards, as opposed to creating public pressure for the policy change. And that's something that we've sort of seen in the CEO pay arena. A lot of the research on that is pretty negative in terms of whether or not it's affected pay rates at all. So mixed feelings about that.
Could I ask a bit of a follow-up question there? Does the US situation distinguish clearly between trusts and companies in terms of transparency? That being an issue in New Zealand, where of course we do have lots of trusts, and do you think we do have some information about who controls a little bit of companies at a certain level, but we have absolutely no idea often in relation to trusts, which may own the company concerned?
Trusts are also a problem in the US, and in fact a problem for the US, not only for domestic enforcement, but there are international obligations around various agreements to try to address corruption and money laundering that require countries to get a better handle on the beneficial ownership of, the ultimate ownership of various entities like trusts, partnerships, and other types of things that aren't corporations. At the moment, the US is considering how to implement a law that was enacted at the tail end of the Trump administration on the bipartisan basis called the Corporate Transparency Act. And what that requires the US Treasury to do is to set up a registry by which certain entities would register their beneficial ownership ultimately. At the moment, there are a lot of questions that the legislation didn't actually answer, including what types of trusts and partnerships are included in this rule. So that's a really important rulemaking, and it's actually one that the Tax Law Centre at NYU submitted on to sort of suggest ways in which they should interpret the authority that the legislation gives them. But I completely agree that sort of trusts have to be part of that transparency and ownership understanding.